Hello everyone, welcome to today's financial market news. I'm your news broadcaster, and today we will bring you some of the latest developments in the U.S. securities and financial markets. First, let's look at today's U.S. stock market. The Dow Jones Industrial Average fell by 0.43%, and the S&P 500 index also fell by 0.53%. This is due to bond sell-offs causing yields to rise, attracting traders to leave the stock market. Especially on Friday, the Dow Jones Industrial Average fell by 150 points. Next, let's look at some company dynamics. EVgo's revenue exceeded analysts' expectations, and its private label charging business is booming. However, Qualcomm's sales and forecasts were below expectations, with smartphone chip sales falling by 25%. Robinhood's revenue exceeded expectations, but its stock price fell due to a decrease in user numbers. Humana's stock price rose because the insurance company's medical costs were lower than expected. Although KFC's sales soared, the revenue of Taco Bell's parent company, Yum Brands, did not meet expectations. CVS's revenue and earnings exceeded expectations because the company is cutting costs. Pinterest spending soared in the second quarter. Virgin Galactic received $2 million in quarterly revenue after its first commercial flight. Despite the continued weakness of the PC market, AMD's results were better than expected. Starbucks business in China is booming, but sales are still disappointing. JetBlue has cut its forecast due to a shift to international travel and the end of its agreement with American. Although September is traditionally the weakest month for the U.S. stock market, this year, investors say that turning the calendar should be particularly worrying. Finally, let's look at some crazy stock market dynamics. The viral KL99 moment of superconductors has taken investors on a crazy journey, with stock prices soaring and then plummeting, and these companies are not even directly related to room temperature superconductors. That's all for today's financial market news. Thank you for listening. See you next week.